is that we know that M2 money supply is the overall money in the markets or in the system, right? And what we can see here is that in July, M2 fell 3.7%. It's the longest and deepest of the money supply contraction since 1933. All right, now this is where it gets tricky with Bitcoin. There's a bunch of different exchanges. And this is honestly one of the things I hate about it. We need something where price action is kind of uniform because
Bitcoin has been making headlines recently as its price surged as high as $26,600. This uptick in price comes as key whale and shark addresses have started accumulating Bitcoin once again. According to available data, there are currently 156,660 wallets holding between 10 and 10,000 BTC, and these addresses have collectively accumulated $308.6 million worth of Bitcoin since August 17th. Bitcoin continued to sit firmly around the $26,000 level after breaking out of a key price floor. The world's largest cryptocurrency by market cap has mostly consolidated in recent days as traders await Federal Reserve Chair Jerome Powell's speech at Jackson Hole this Friday. Bitcoin halving can take BTC price to $148K by July 2025. BTC price is right on track when it comes to cycle top and bottom timing, Bitcoin bull Pantera says. Bitcoin miners navigate record challenges and August's dual difficulty hike. Now, let's begin our enlightening discussion with Gareth Soloway.
This is actually really interesting on Bitcoin. So, if we go to the Bitcoin chart, all right, now this is where it gets tricky with Bitcoin. There's a bunch of different exchanges. And this is honestly one of the things I hate about it. We need something where price action is kind of uniform because on the Bitcoin chart, this candle is a bottoming tail, but I'm looking at Bitstamp right now, okay? So a bottoming tail tells me there's a reversal that could be coming into play here in the near term. Now, by the way, I don't think a reversal means we're going back up here or up here. I just think we might retest this trend line right here. But still, as a technical trader, that's something I'm interested in. Now, one other thing to note here is, and this is the problematic issue, is that if you go to Bitcoin on Coinbase, all right, then notice how here, let me just refresh this, right? So notice how, and again, this is something I'm going to go over, this low of the candle yesterday didn't take out this low down here. For it to be a bottoming tail, it has to be the lowest point in recent history. This was lower than this, therefore it's not a bottoming tail. So on Bitstamp, you got a bottoming tail. On Coinbase, you don't have a bottoming tail. I looked up on Binance, it is a bottoming tail. So this is the tricky thing. Is the bottoming tails are reversal signals, but you don't have it on Coinbase. You have it on a couple platforms, a couple not, or a couple exchanges. It makes it very, very tricky. All right, so just be aware of that. I'm pointing this out because I think it's worth noting that on some exchanges you did get a bottoming tail, but it certainly isn't something that, again, I could say universal. If it was universal, it would be a glaring short-term buy signal on Bitcoin. It's not, and therefore it's a little murkier. I wish it wasn't. But I'm just giving you the facts. This is the data. The data is that it's not universal on all exchanges. This is some data. So one of the things that came out recently is now this is the meeting probabilities for hikes with the Federal Reserve. So I'm now switching away from NVIDIA earnings into hiking. What's the Fed going to do? Because remember, Jerome Powell has a meeting. He basically has Jackson Hole, the conference, the Thursday, Friday going into the weekend. And he will be giving a speech at 10:05, I believe, a.m. Eastern time on Friday. Markets are going to be on the edge of their seat. Now, what we're seeing here is that the market is finally coming to the recognition that there's going to be no rate hikes until next year. In fact, what we can see here is that clearly the market is anticipating that interest rates will stay between 5.25% to 5.5%, going all the way into the March or through the March meeting next year. And again, here's your March meeting next year. Okay? Check that. It's even lower. It's even the May meeting. All right, so even through the May meeting of next year. Then we start to see the market expecting a rate cut in June. In the June meeting is now what the market is anticipating for a rate cut. And why is that important? Well, it's important because we now have a scenario where the markets up until now were all anticipating a rate cut before year end. So remember how the Fed was saying higher for longer, guys. Hello, hello, higher for longer. Well, the market kept saying, no, we don't believe you. Well, the market is now finally starting to believe you, or believe the Fed. The reason this is important is it means more restrictive policy on money for longer, which eventually drains money out of risk assets. So this is an interesting chart that I came across, and this is a chart showing that the median selling price for U.S. single-family homes is now, all right, new home prices are equal to existing home prices. Okay, now you might say, well, why is this? I mean, usually you would think a new home would be priced higher than an existing because it's brand new. Everything's new. Price is generally going to have a premium. What this tells us, and this is fascinating, we saw this with new home sale numbers yesterday. We just saw a decline, a precipitous decline in home sales yesterday. Remember, I talked about that in the game plan, 10 o'clock, we had the home sales data. So we saw a pretty big decline. And what this is now telling us is that the home builders that are selling new homes, okay, this is important, the home builders that are selling new homes are recognizing that the market for home buying, because of rates, is declining, and they're dropping their prices. All right, the retail, the yous and the me's, the general public that's trying to sell their houses, and this is very normal psychologically, they are not yet recognizing that the housing market is stalling, and they're saying, hey, I still want to get X price for my home. Home builders have the inside information. They're the ones building the homes. They have the inside ear to the home building market, so they're able to say, hey, listen, we see the weakness. We got to drop our price. These guys that are retail, that are selling their homes, they're not doing that. Eventually, this will happen with these guys as well, and they'll start to recognize it. But I thought that was really interesting because it is showing that the home builders are now recognizing that rates are so high that they have to start dropping. The demand for houses is falling precipitously, and this, honestly, both of these numbers are going to continue to go lower, but this one should play catch up in terms of going more to the downside than new home.
Don't forget to join us as we explore the unfolding events. On Monday, S&P Global Ratings slashed ratings for 5 U.S. regional banks, pointing to the strenuous operating atmosphere plaguing the sector since the year's outset. The impacted banks include Associated Bancorp, Comerica Inc., KeyCorp, UMB Financial Corp., and Valley National Bancorp. Simultaneously, the outlook for 2 others has been dimmed to negative. According to Steve Rosenblum, the founder and CEO of Libertify, artificial intelligence AI-driven investment solutions can assist investors in making timely adjustments to asset allocation. This means investors using such a solution will be able to navigate the volatile crypto landscape while maintaining a balance between risk and potential returns.
Is that we know that M2 money supply is the overall money in the markets or in the system, right? And what we can see here is that in July, M2 fell 3.7%. It's the longest and deepest of the money supply contraction since 1933. So what we're seeing is we're seeing rates that the market's anticipating staying higher for longer, which again is taking, remember, the higher you raise rates, the more money it sucks out of the system. Why? Well, because people park their money in bonds. They say, okay, well, I can now get 5% on my bonds or in my money market or anything like here. Let me just lock it up and get my 5% or 6% or whatever it is. It's taking money out of the system. All right, so ultimately what we see here is a decline in M2. And again, look at the increase in M2, and if you charted the S&P 500, it would look very much like this. The only difference is the S&P's gone like that, while M2 has collapsed. And so the thought process here is that you probably, again, based on data.
If you enjoyed the video, don't forget to give it a thumbs up and subscribe to our channel for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.